Hello, everyone. My name is Jack Bosch, and welcome to another episode of the Forever Cash Life Real Estate Podcast. We're excited to have a very special guest by the name of Rana Vig today, and we are going to talk about economics, about supercycles, economic supercycles, hard asset supercycles, and about all kinds of different things of what's happening in the economy right now and what's about to come in the future. I'm super excited about that.
Welcome to the Forever Cash Life Real Estate Investing Podcast with your hosts, Jack and Michelle Bosch. Together, let's uncover the secrets to building true wealth through real estate and living a purpose-driven life.
All right, so we're back. And with that said, let me introduce our guest, Rana. Rana, how are you doing today?
I'm doing fantastic, Jack. Thank you.
So I'm super excited to have you today because, man, do you have a biography? So instead of me butchering it all up together, why don't we let you tell us a little bit about your history, about your biography, about the successes and the big wins and the things that you have in your career path, and then we'll jump right into the subject matter.
Sure, happy to. Well, basically, I'm an entrepreneur. I've been in business for over 35 years, predominantly in private business. First, sort of a few years of my life, business life, it was, private industry. I had the opportunity to take 5 different companies to market, all in different verticals. So, I just learned a long time ago just to be, I'm not that smart. So, be the dumbest guy in the room, right? So just surround yourself with some very, very smart people in that specific industry and help execute on a plan that they often can't. And then about 10 years ago, I got invited to the capital markets by a very successful venture capitalist worth well over $300 million, who made most of his money in mining originally, and then moved on to real estate. He told me that his wife was very, very smart and wanted to make sure that he kept his money, and suggested they buy a plaza. And he took that money he made originally in mining and put it into the first plaza. Next thing you knew, he owned 20 of them around the city. So he made good use of that money. My timing, unfortunately, in the mining sector was not so great, because after 2008, 2009, when the economic downturn happened, the mining sector completely collapsed. So I put over $1 million into the mining, exploration industry, and about 6 months later, it was worth like 10,000. I'm like, holy smokes, what happened here? But you know what? That's entrepreneurship. So I ended up taking over a couple of my investments as CEO. Not necessarily knowing much about mining, but you know what? Business doesn't change, whether you're, running a rental building, or whether you're running a restaurant or a furniture manufacturing. The fundamentals of business don't change. So I hung in there, and unfortunately, 6-7 years later, mining still was kind of in the doldrums, wasn't really doing well. And then the cannabis sector really took off. And, I look for trends to see what's happening. So I thought, boy, we got to jump in here and make some money. So I laser beam focused on that industry. And in 2018, I had the pleasure of taking a company out of the Boston area called Curaleaf. I took them public. It was the biggest cannabis raise in Canadian history, $520 million raised, and nearly a $6 billion reverse takeover of that company. And then a couple of months later, I did it again. I was able to find actually something from your area in Arizona, a company called Harvest Health and Recreation, which was the third largest of 2018, a $300 million raise and a $2 billion RTO. So,
oh, wow.
It was a very, very exciting. And then, you know what? Everything I was reading at the macro level told me that mining's got to come back. It's been 10 years. It's very cyclical. And everything I was reading about all the money printing that was happening around the world and the governments being broke, I thought, you know what? This is the time for gold and silver to make it. And at the end of 2018, early 19, everybody thought I was crazy. I started my latest venture called Blue Lagoon Resources, which is a gold focused and a silver focused company up here in British Columbia. So there you have it.
All right. Well, that's quite a history here. So I'm super excited about that. So Blue Lagoon, what was the name?
Blue Lagoon Resources.
Okay. I'm going to take a note of this. And now, what makes you think that mining is actually related to land flipping, of course, because obviously, like just in Arizona right now, I think a judge approved a land swap that would allow it's not gold or silver, it's copper. I think it's the only mineral we have here of any value, that a land swap that would allow a company to go even deeper into the mining round. And I think one of the largest company in Arizona is a mining company. So we got some, it has obviously to do with land and with mineral rights and things. So we might talk about that a little bit too. But first of all, from a macro point of view, like why do you think that the hard metals are about to come back? Don't we have crypto? And I'm being a little facetious here. Don't we have crypto? And don't we have don't we all all get checks from the government now, or what's going on? So, or is that the reason why
you're getting those checks and putting them right back into the markets? That's why the markets are doing so well right now. That's what people, fortunately or unfortunately, where they're putting their money.
I'm not getting any checks, but
supposedly the checks that are coming. Look, the Supercycle is coming because, again, number one, mining is cyclical. All right, so it's been more than 10 years, about 10 years that it's been down and out. So it's time. Number two, the world has never seen a crisis like we're seeing today. Number one, you've got governments all over the world, and forget about Canada, the United States. I mean, all over the world, they are completely broke, and they're trying to figure out how to keep the economies propped up. So to do that, they are printing unprecedented amounts of money. So what does that do? Well, that devalues, the currency, right? And then on top of that, you've got this pandemic that's happening, worldwide, which is causing all sorts of chaos and further economic downturn. And then you got riots and unrest, again, in various countries. All of these things are something that gold, precious metals really, really like. They like instability, and gold has been a form of wealth for generations, right? This is not something new, right? It's always been treated as money. So any hard asset, the real estate is similar, right? As the dollar devalues, these hard assets become really, really important, and that's why gold is entering into a super cycle. It's already been up. Significantly this past last year, and it's expected to go much, much higher this year.
Okay. So it's the fact that the currencies devalue it, and gold essentially is a currency. Right? It's been kind of the oldest currency that we know of.
Yes.
If we don't want to go into cocoa beans in the Mayas, but even before that, even in the Roman Empire, it was gold coins and silver coins and things like that. So we had. Gold is an established currency that the market falls back to in order to account for insecurities. And every time there's a big insecurity, you see gold prices spike up. So, and the second thing I heard you say is that right now the governments are all broke and they're printing money like crazy, trying to prop up the economy, which therefore will eventually lead to some level of inflation and therefore devaluates the money that we have in our pockets, the dollar bills. But it doesn't devalue gold. On the contrary, gold, somebody I think has said that 1,000 years or 100 years ago, you could buy a car with 10 ounces of gold. And today you can buy a car with 10 ounces of gold, right? So basically the value of the gold has remained stable, but you have to spend $30,000 or whatever, $20,000 for an entry-level car. And you had to spend $2,000 back then, or whatever it was for a car, like whatever the 10 ounces of gold is worth. Yeah. So with that said, what is your strategy on there? Are you buying mines? Are you investing in mines? How can one of our listeners here say okay, that makes sense? Are you telling them to invest in gold? Are you telling them to what is your thinking process about how you're capitalizing on that prediction, let's say?
Well, that's a great question. Both, actually. It's always recommended that a certain part of a portfolio should be in hard assets, right? Of course, real estate and gold and silver. So we always recommend that 5-10%. Sort of the 10% has been always the mantra. But you have to look at your own economic.
You're including real estate into hard assets too, right?
Yes. Oh, okay, absolutely.
Important to know. So good.
Well, look. It's think about it this way. And I'll give you two examples. If you go back to the 70s when gold was about $35, right? And if we took 1 ounce of gold in that metal, put it in a bag and buried it in our backyard, and we took $35 and put it in a plastic bag and bury it next to it, and today, fast forward in 2021, we dug it out, right? What is that piece of metal? What is that 1 ounce worth today? About $18.50. But what is that $35 worth today? A couple of cups of coffee at a Starbucks, right? I mean, look at the devaluation, but look at the value of gold. And to look at a real estate example, right? My dad in the 70s was an engineer making about $40,000 a year. And the first house we bought, back in the 70s here in Vancouver was about $40,000. Right. But today, the same engineer makes about $85,000. But you know what that same house is? over $1 million. In fact, it's close to $1.5 million. So look at the, so the hard assets, to have an investment in hard assets is very important. But you know what? The only thing is, though, is that gold isn't. It's more of an asset, not an investment, right? It's something that you to keep, to protect your wealth. If you want to have leverage, that's when you invest in companies like ours, companies like Blue Lagoon Resources, or other companies, similar, that have good management and with a proven track record and have good properties. And the reason that is because when these commodities, when they get into a super cycle, for every small incremental rise in gold price, the stock of that company, the underlying company, goes up multiples of times. So what happens is that's when you get your biggest bang, your biggest leverage. So to answer your questions, what do I recommend? I recommend that people do both, right? I think they should have some amount, in hard assets, and some amount, exposure in good junior mining companies that are about to hit the super cycle.
Yeah, so I think that's a nice distinction between real estate and gold. Gold is something, like Warren Buffett says, that just sits there and looks at you and doesn't do much, but it preserves your value. Like real estate, particularly income producing real estate, is something that requires management, but therefore typically brings in cash flow in addition to appreciation.
Yes.
Right. So your company, and what you're basically saying, like investing in a company like you run, is like investing in real estate, because it's an asset, because it owns the operations of running gold or so, and it also owns, it's also valued as a multiple because it spits out cash flow because of its profitability.
Yeah, so right now we're not spitting out cash flow. We are about to go. We are working towards getting to production, and we believe we'll be there later this year. But that's where the value is, right? The value is, like, today, for example, one of the research companies just came out with a report that they released last week. They believe that our company is about 50% undervalued. And so how does the value of our company increase? It's something similar to a land position, right? So if you buy a piece of land and it's you subdivide it, you get it rezoned, and you make it into smaller parcels, that increases the value of that land. Then if you put a building up onto that increases the value of that property. So it's similar in exploration. We have a mine that is very close to production. So, we're valued at X today. As we're trading, it's amazing. We're trading at around 50 cents a share right now. We have a market cap of about $50 million. But as we put that into production, the value, of course, increases. As the value of gold goes up, that increases even further. And then, of course, we have a very large land package around that mine, which hasn't been explored yet. So we're doing that. So as we do more exploration and prove up that we have more ounces there, that further increases the value. And by the way, you mentioned Warren Buffett. You're absolutely right. For years and years, he's always said, hey, listen, gold doesn't lay any eggs. It just sits there. It doesn't pay any dividends. But what's interesting is about 3 or 4 months ago, he actually, for the first time, invested in a major gold company.
Okay.
Because he's starting to feel that the dollar, he's losing faith in the dollar, basically, right?
Right. Very cool. So now, how does your company select areas that they like that they think are high valuation area? This is more like, let's transition a little bit more, just something more educational things for our land flippers that are perhaps asking themselves, like, well, where should I go? Because we have all kinds of land flipping clients in our customer base. Some of them flipped the little $5,000 properties for $500, buy them for $500 and sell them for $5,000. Some of them go after the multi-million-dollar properties, and some of them are interested in land development, joint ventures, finding land that perhaps other companies are interested in, so on and so forth. So over the entire breadth of our customer base, I think there's a lot of interest there in just learning more about just like, how does a mining company determine where to even go?
That's to do with the geology. So, we have technical people, right, who look at basically the geology of the area. And these are known mining districts. So, for example, you said Arizona has a lot of copper, right? Well, copper is about to become in play, because guess what? Yesterday, I was watching the news, and GM was talking about by 2040, they want to be carbon neutral. So they're going to have all their cars are going to be electric. When an electric car requires more than 4 times more copper than a regular car. right? And that's just one piece of it. So imagine worldwide, all companies moving towards electrification, and then of course stimulus. Governments typically, in order to get people back to work, they love building infrastructure, roads, bridges, buildings, all require a tremendous amount of copper. So you know what, copper is going to become very, the prices of copper have been moving up steadily. In fact, they've gone up about 50% over the last year. So all those things become very, very important. So where do you find these things? Well, there are certain geological events that happened, thousands of years ago, right? And those are known areas, right? So certain areas are copper, certain areas are gold, silver, and different, So that's basically, how the simplest way I can answer is that the technical team looks at areas. So we started, for example, 2 years ago with a much different property, and then we still have that one. Then we bought another one, and then we eventually found this mine, because I was looking for something bigger. I didn't want to. My vision is very broad, right? Like, for example, Curaleaf started, like I said, in 2018, and guess what? Today it's trading at about $22. Right, Harvest is trading at about $5.50. So you're looking for a much bigger place, right? You start with a small property, and then you work your way up, and that's what we've been doing with Blue Lagoon Resources.
All right, wonderful. Well, awesome. So this has been, I think, very educational. So in other words, is there like public, this probably, at least on the level of public information, is there like public, can somebody just Google where like known mining areas are, or is there a national archive, or is there a state by state kind of thing, just for the public stuff, for the stuff that everyone knows, not asking to divulge any kind of like secrets information about where you get the ins and outs of, or where good areas might be, but just like public information, so that our students could go and say like, you know what, let me look that up to see, am I in an area like that where it's even worth talking about mineral rights to the owners when I'm making an offer on their land, or should I not even bother because there's nothing there?
Yeah, I mean, look, the most powerful tool today is Google, right? I mean, it seems to know everything. So absolutely, there's all sorts of information that's available. But generally, you're looking for geological trends. It'll if you do a little bit of a homework, you'll be able to find which areas have that. And of course, these are often remote, right? It's often remote areas where you can go and stake that land. It's highly prospective. I think it would take quite a bit of time and research to kind of learn that. I think a safer bet, if it was investment wise, a safer bet would be to find a good company that has, as I mentioned earlier, good management, a track record, and good properties.
Oh, absolutely.
And invest
I would agree with that. I'm just thinking that some of our students are going to be like, yeah, let me go get some land under contract over there, and then perhaps come to some of the companies and then say like, hey, I got this on a contract. You interested? And if it's in such an area, it might be even a bigger flip, or even a better flip. Might also be a more long-term flip, because of the proper geological studies would need to be done. So no, awesome. So where would people go to find out more about you?
The best places
about the company.
Yeah, the best place is on our website, bluelagoonresources.com. There's an email link there. I'm happy to answer questions or engage with the audience of broad spectrum of questions. We trade both in the U.S. and in the United States. In Canada, we trade under the symbol BLLG, and in the U.S. we trade under the symbol BLAGF. And ask questions, do some research. Look, at these interest rate levels, I think real estate is a great play, and obviously makes a lot of sense. We're looking constantly. Me and my wife were constantly scouring the areas for good opportunities to buy land or buy houses or buildings, etc. But at the same time, right, have exposure, in my opinion, to some gold, and have exposure to some good companies that have that'll give you a lot of leverage when the super cycle begins. These are times when generational wealth gets created when cycles hit. I don't know if your audience followed the cannabis sector, but it was crazy. You wake up every morning and my portfolio would be up 10%, 12%, 30% every day. I mean, it was just incredible, the run when the momentum builds, right? That happens in the markets.
Yeah, that's a very, 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 very wise statement right now, and perhaps we'll just summarize it on that. And we are indeed living in times where where really generational wealth is being created, and where also wealth is being changed from one hand to the other, because we are living in the third industrial revolution right now, or not even industrial revolution, but it's the term, but technical revolution, or whatever you want to call it, because we are. Everything is the automation level, the computerization level, the availability of everything. I mean, just think about Uber Eats without the pandemic, and a pandemic without all these food delivery services. What would you have done, right? What would people that really need to isolate would have done? And when we think about that, but it's also, with that comes that it's times of great change. And times of great change always bring with them great opportunity. The one that shies away from the change is going to be the one that loses out on everything. The one that leans into the change and leads in and follows the change and figures out the change is going to be the one that is exponentially being rewarded for that. So I see that you obviously have a track record of leaning into the change and being, with some risks, right, being exponentially rewarded for it. And we have done the same thing in multiple areas, and our students are now doing the same thing by leaning into what other people don't do, which is land flipping, and then being rewarded for it in a way that they perhaps never even dreamed about. So guys, check out bluelagoonresources.com. And with that said, I have a few last questions, Rana, and that is, for example, one of them is, a person like you is invariably and undoubtedly, I'm sure, a reader. What are some of the books that you're reading these days?
It's funny you asked that. These days, I'm reading more of the technical aspect of it. The time is so limited right now. It's amazing how fast the day goes. And I have a couple other investments that I'm looking at. So these days, I'm reading a lot of technical material that is to do with the exploration and mining and increasing that. But I did always do a lot of sort of self-help. In fact, your Rich Dad Poor Dad is one of the very first books that I read many years ago, and still had a huge impact on me. But unfortunately, lately I have not been able to go to the latest sort of releases that are done, because my time is just so overwhelmingly taken up by the technical material.
I know it feels that makes total sense. And great. So with that said, then thank you very much for being on the show. Again, everyone, check out Blue Lagoon Resources. Again, obviously, we don't know the company that well, so this is not an endorsement, but it's educational about what might be coming here in the future, that there might be a run up in these hard assets coming. And the hard asset doesn't just mean that you spend the money to put gold or silver into your safe. It also means that you can be a part of the companies that actually do that, and then have potentially an even faster run up in income. Now, of course, you need to make your own investment decision. This is not investment advice, nor do I qualified or licensed to give any investment advice. So just my job is, I believe, is open people's minds to think differently, to look at different asset classes from different kind of levels, and to then make their own valid decisions. All right. With that said, thank you very much, Rana.
Thank you. It's been a pleasure.
All right. And with that concludes another episode of our Forever Cash Life Real Estate Podcast. As always, give us 5 stars, reviews, give us a thumbs up. If you're watching it on YouTube, give us a like or a thumbs up. And if you're watching or listening to it anywhere else, share it with your friends, because that way we can be seen and heard by more people out there. Right. Thank you very much. Bye-bye.
Enjoyed this episode? Then make sure you like, subscribe, and post your comments and questions below the video. We're looking forward to hearing from you.